Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 17th of May 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's take a look at those overnight changes and price moves to be aware of. Not the busiest session overnight in the global foreign exchanges, it must be said. Nonetheless, some key points of interest to bring to your attention. First of all, the Australian dollar against the US dollar. The Aussie weakening again, down by 0.1% overnight to trade at 68.84.90 shortly before we recorded the video. It doesn't look very likely, does it, now that the Aussie is going to rebound back through 70 in any kind of short order. We're down 1.63% over the course of the last week and 3.7% over the course of the month, I should say. We'll look at the reasons behind that a little bit later on in the video. The Japanese yen strengthening against the US dollar, trading up to 109.69 shortly before we recorded the video. That's an improvement of 0.13% as far as the yen is concerned. The dollar taking a further 0.21% off of the Chinese yuan in Asian trade, trading at 6.94 this morning. Look at the weekly and monthly changes here, 3.5%. The dollars are up against the yuan over the course of the last month. How long will Washington let that Chinese yuan easing or weakening pass before they make a comment about currency manipulation? That's something to consider going forward. Elsewhere, the dollar was on the front foot against near neighbours Mexico and Canada, improving by 0.1% against the Canadian dollar and 0.12% against the Mexican peso. Dollar index for its part largely unchanged overnight, though down a smidgen for choice. Over the course of the last week, the dollar index has strengthened, however. And if we look at dollar rand, the dollar increasing by 0.18% against the South African currency. Remember, of course, the South African currency very sensitive to trade tensions and also a poster boy to some extent for EMFX as a whole. Okay then, what's on the calendar? Events that may move the markets today. A relatively light calendar as far as data is concerned, though we do have some interesting data to come mid-morning today. At 9 AM GMT, we're in Europe and we shall have the release of a series of consumer price index data points out of the Eurozone. This is the month-on-month data for April, both core and non-core, as I say, for the whole of the Eurozone. And accompanying the CPI or inflation data, we'll also have some construction output data out of the Eurozone for the month of March. That's also at 9 AM GMT. We pause then until 1400 GMT this afternoon. We've crossed over the Atlantic at that point to the US for the influential Michigan Consumer Sentiment Survey Index for the month of May. Put a further pause this afternoon until 1700 GMT, which will see the release of the Baker Hughes US oil rig count, a look at the number of active drilling rigs operating in the USA, and that can usually bring some influence to bear, shall we say, on oil prices, so always worth watching that number. Then at 1740, the first of the day's central bank speeches, this from Fed Deputy Clarida, and then at 1800, another central bank speech, and this from the Fed's Williams, and that concludes the central banker action for Friday. And then at 1930, to bring things to a close, we'll have the weekly release of the CFTC commitment of traders data in markets such as oil, gold, the US dollar, the British pound, the Japanese yen, euro, Australian dollar and others. Okay then, breaking news and comments caught my eye overnight. And first of all, the Aussie dollar has fallen to a 19-week low as the market senses a rate cut at the next RBA meeting is on the cards. Meanwhile, polls in Australia suggest that Scott Morrison's coalition government is facing defeat in this weekend's general election, with the Labour opposition looking the most likely winner. And those elections take place tomorrow. A Reuters poll among economists has found that US-China trade tensions have raised the probability of a US recession to 40%. Up from 35% last month. 75% of the economists polled believed that the risk of a recession were now elevated in the US. And finally, New Zealand's manufacturing PMI data rose to 53 in April, up from 52 in March. And though underlying components are slowing down in that PMI data, New Zealand equities traded at a new all-time high overnight and are up by some 16.5% year to date. So the weaker currency in New Zealand, the interest rate cuts seem to be having the desired effect as far as stock market investors are concerned, and that manufacturing PMI boost might also give the Reserve Bank of New Zealand some comfort too. Right, time for food for thought and something to take away with you into the trading day and beyond. And why not think about this? UBS pointed out yesterday that as far as economic surprise data was concerned, we've seen the strongest improvement in the G10 in the Eurozone. And you can see here over the 20-day period, Eurozone economic surprises have rallied strongly. That means that Eurozone data has outperformed analysts' consensus forecast for that. And we might have thought that should have elicited a decent move in the currency. Here's the euro against the US dollar, the euro dollar rate if you prefer, but we haven't seen a bounce in the euro, and one wonders what the market thinks about that. Why aren't they latching on to this improvement in European data? Do they think that that's a blip rather than a continuation of the recovery that Mario Draghi's talked about? And do they still have concerns about a further downturn in the Eurozone and the need for the Eurozone to take further action on the easing side? Well, remains to be seen, but I think it's worth bearing that in mind and considering why we've seen that underperformance in the single European currency. Okay then, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do take the time to contact your Pepperstone account representative, who will be happy to take you through those. And as I say, do read this risk warning thoroughly, please. Thank you for your time today.